Inflation is finally falling, and that single shift could spark one of the biggest stock market rallies we've seen in years. Hey everyone, welcome back to Stock Predictor, where we break down the biggest opportunities across the US and global markets so you can stay ahead of the game. If you're watching this video right now, you already know that the market has been fighting high inflation for the last couple of years, dealing with rising interest rates, slower growth, and tons of volatility. But 2025 is shaping up to be a completely different story. Inflation is cooling, interest rate cuts are coming, and investor sentiment is quickly swinging back to risk-on mode. And that shift creates new winners, new momentum, and new stocks that could absolutely explode in 2025. So in this video, I'm going to break down why falling inflation matters so much, what sectors are positioned to benefit the most, and the specific stocks that look ready to skyrocket as the macroeconomic environment turns bullish again. Make sure you watch until the end because the last stock I'm going to talk about is one that most investors are completely sleeping on, but it has the potential to deliver massive upside as rate pressure disappears. And of course, don't forget to like the video, subscribe to Stock Predictor, and hit that bell so you don't miss future updates. Let's start with the biggest point. Falling inflation isn't just good news for consumers, it's a massive catalyst for stocks, especially high-growth and tech-driven names. Over the past 2 years, higher interest rates made it more expensive for companies to borrow, expand, and invest in new technology. Growth companies were hit the hardest because most of their value comes from future earnings. When interest rates go up, the value of those future earnings goes down, and that's exactly what caused many growth stocks to crash. Now flip that around. As inflation drops, the Federal Reserve gets room to cut interest rates. Lower rates make growth stocks more valuable again. Money becomes cheaper. Investments flow back into risk assets. And historically, when inflation cools off after a high inflation cycle, growth stocks tend to outperform everything else in the market for the next 12 to 24 months. That's why 2025 is setting up to be a breakout year, and we want to position ourselves early. Now let's talk about the first major stock that could explode in 2025, Nvidia. This company has been the undisputed leader in artificial intelligence, graphics processing, and data center technology. And as inflation cools off, companies around the world are increasing their spending on AI infrastructure again. Every major business, from healthcare to automotive to robotics, is building AI capabilities, and all of that requires high-performance chips. Nvidia is not just selling GPUs anymore, it is selling an entire AI ecosystem, from hardware to software to cloud solutions. Even after a massive run in previous years, Nvidia still has room to grow as demand for AI doubles year after year. And when borrowing becomes cheaper, more companies can afford to invest in AI transformation, which directly boosts Nvidia's earnings potential. In an environment where money flows back to growth, Nvidia is positioned to dominate and could see another explosive rally in 2025. The second stock that looks incredibly strong as inflation falls is Tesla. Now, Tesla hasn't had the best past year. Between competition from China, price cuts, and macroeconomic pressure, the stock did face headwinds. But here's the thing, when inflation drops and interest rates fall, consumers regain purchasing power. Car loans become cheaper, electric vehicle demand rebounds, and companies like Tesla benefit immediately. Tesla has also been aggressively expanding in energy storage, autonomous driving, and robotics. And while the market has been focused on short-term issues, the long-term growth story remains powerful. Falling inflation also helps lower manufacturing costs, especially for raw materials like lithium and aluminum. That directly improves Tesla's margins. With new factories coming online and new technology rolling out, Tesla is set up for recovery, and 2025 could be the year the stock turns around and delivers big gains again. The third stock on the list is an absolute powerhouse in the cloud sector, Amazon. Even during periods of high inflation, Amazon continued generating massive revenue from its e-commerce platform and its cloud division, Oz. But as inflation cools, consumer spending increases. People shop more. Businesses restock inventory, and online retail surges. That's a huge positive for Amazon's retail business. But the real growth engine lies in AWS, which remains the #1 cloud computing platform in the world. Companies that paused cloud migration during inflationary periods are now restarting their plans. And as AI tools and automation expand, cloud usage increases even more. Lower interest rates also help Amazon reduce operating costs and invest more aggressively in logistics, robotics, and AI technologies. Combine that with improving consumer spending, and Amazon becomes one of the biggest potential winners in a falling inflation environment. Now let's discuss a sector that is extremely sensitive to inflation and interest rates: real estate. For the past couple of years, real estate stocks, especially REITs, took major hits. Mortgage rates soared, housing affordability dropped, and investment in commercial properties slowed down dramatically. But falling inflation means mortgage rates start declining. When that happens, real estate demand rebounds quickly. One REIT that looks particularly strong going into 2025 is Prologis. This company owns logistics and warehouse facilities used by e-commerce and supply chain giants like Amazon, FedEx, UPS, and many more. As rates fall, demand for industrial space increases, and Prologis can expand its rental income, property value, and long-term contracts. Real estate stocks like Prologis don't just recover, they often outperform the broader market when interest rates are falling. Another stock that could explode as inflation declines is Microsoft. The company is heavily invested in artificial intelligence, cloud services, cybersecurity, software automation, and enterprise solutions. During periods of high inflation, companies cut back on IT spending. But now that inflation is easing, corporate tech budgets are rising again. Microsoft's partnership with OpenAI and its integration of AI into Office, Windows, Azure, and enterprise tools gives it a massive competitive edge. Lower interest rates also allow Microsoft to invest even more aggressively in innovation. This isn't just a tech stock, it's a foundational part of the digital economy. And as businesses unlock new growth opportunities in 2025, Microsoft stands to benefit in a big way. Next up is a stock that is often overlooked but could deliver massive returns as inflation declines: Block, formerly known as Square. This company powers digital payments, small business transactions, and peer-to-peer transfers through Cash App. When inflation is high, small businesses struggle. Loan costs rise, spending falls, and digital payments slow down. But when inflation cools and interest rates fall, small businesses recover. That recovery brings increased transaction volume, higher revenue for Block, and stronger adoption of financial technology. Cash App also continues to grow rapidly among younger users, and Block's expansion into banking services is creating a new ecosystem of financial tools. With lower rates, fintech companies almost always outperform, and Block is set up for a major comeback. Another major opportunity in a falling inflation environment is the semiconductor sector, and one stock in particular stands out: AMD. Unlike Nvidia, AMD focuses more on CPUs, gaming chips, and enterprise processors, but the company is quickly expanding into AI hardware and high-performance computing. During high inflation periods, customers delay upgrades to hardware. But when prices stabilize and expansion becomes affordable again, companies invest in new chips, new servers, and upgraded technology infrastructure. AMD has been gaining market share from Intel, and if inflation stays low, its enterprise division could explode with new demand in 2025. Another stock that could soar as inflation falls is Meta Platforms. Advertising revenue is extremely sensitive to inflation. When inflation is high, companies reduce their ad budgets because consumer spending slows down. But when inflation falls and discretionary spending rebounds, companies increase their marketing budgets again. That means more ad buying on Facebook, Instagram, WhatsApp, and Threads. Meta has also been heavily investing in AI-powered recommendation engines, which have dramatically improved engagement across its platforms. Combine improved ad revenue with lower borrowing costs for the company, and Meta could see extremely strong earnings in 2025. Let's also talk about an energy stock that stands out as the economy strengthens: NextEra Energy. This company is one of the biggest renewable energy providers in the U.S., and renewable energy projects are extremely sensitive to interest rates because they require large upfront investment. When inflation falls and rates drop, renewable energy expansion becomes much more profitable. NextEra benefits from long-term contracts, stable cash flow, and increased investor interest in clean energy. With 2025 shaping up to be a lower-rate environment, the renewable sector could heat up fast, and NextEra is in one of the strongest positions. Now let's talk about a stock most investors underestimate: Shopify. This company powers online stores for millions of entrepreneurs and small businesses. When inflation is high, consumers spend less online, and small businesses struggle. But when inflation falls, e-commerce spending picks up again. Shopify earns from subscriptions, payment fees, merchant tools, and financial services. And as interest rates drop, business formation rises. More people open online stores, and Shopify benefits from every new merchant that joins the platform. With the rise of social commerce, AI-optimized storefronts, and global expansion, Shopify has massive growth potential in 2025. Now let's talk about the final stock that could explode in 2025, one that many investors are overlooking: Roku. This company benefits when consumer spending increases, advertising budgets rise, and households upgrade their tech devices. As inflation declines, streaming spending rises again. Advertisers return to the platform, content investment increases, and Roku's user base grows. Roku also earns through platform fees, hardware sales, and subscription partnerships. Lower inflation boosts all three revenue streams, making Roku a high-potential rebound stock for 2025. So let's bring all of this together. Falling inflation is not just another economic headline. It is one of the most powerful catalysts for the stock market. It drives interest rates lower, boosts corporate profits, increases investment spending, and pushes money back into risk-on assets. Growth stocks surge, tech stocks explode, real estate recovers, consumer spending rebounds, and sectors like AI, cloud, EVs, fintech, and streaming experience rapid expansion. Nvidia, Tesla, Amazon, Prologis, Microsoft, Block, AMD, Meta, NextEra, Shopify, and Roku are among the top names positioned to benefit. These companies have strong fundamentals, massive long-term growth potential, and clear catalysts tied to falling inflation and declining interest rates. And 2025 could be the year they break out with explosive returns. If you found this breakdown helpful, make sure you like the video, subscribe to Stock Predictor, and turn on notifications so you never miss an update. Drop a comment below telling me which stock you think will dominate in 2025. Thanks for watching, and I'll see you in the next video.